The Facts Behind the Figures is a platform created by the exchange to foster robust interaction between the listed companies and the capital market community. Today, we're very excited to have another of our listed company, Ardova PLC, to also leverage this platform to discuss their financials with our daily member firms, analysts, and the media community. Just before we get started, I would like to introduce some of our guests uh, on the program, on the event today. I have with me Mr. Olumide Bolumole, who is the divisional head of listings business at the Nigerian Stock Exchange. I also have Mr. Olumide Adeosun, who is the CEO of Ardova PLC. I have here with us Mr. Moshood Olajide, who is the Executive Director of Finance and Risk Management at Ardova PLC. We also have Alhaji Yusuf Rashid, who is the doyen of the market. I want to say welcome to all of our guests and all of our participants, and we hope that this is going to be very interactive and it's going to be a very engaging session. As the presentation proceed, we'll be glad to take your questions, to have you drop your questions on the Q&A chat box. Please do that while the presentations are going on. And immediately after the presentation, we'll have some 15, 20 minutes to answer those questions. Without taking any further time, I would like to invite Mr. Bolumole, who is the divisional head of listings business at the Nigerian Stock Exchange, to deliver the welcome address. Mr. Bolumole.
Thank you, Toby. Good afternoon, distinguished ladies and gentlemen. It gives me great pleasure to welcome you all to today's Facts Behind the Figures presentation. On behalf of the National Council, management and staff of the Nigerian Stock Exchange, and the entire capital market community, I welcome the board and executive management of Ardova PLC to today's event. The NSE, as you know, has continued to remain resilient in recent times, leveraging various digital platforms and innovative technology to ensure business continuity and uninterrupted dissemination of information to the market. I commend the board, management of Ardova PLC for utilizing this platform to engage the capital market ecosystem. The Facts Behind the Figures, as you know, provides our listed companies the opportunity to inform the market of their financial performance, as well as their strategic and operational developments. Given that the market is driven by timely, relevant, and accurate information, your interaction with the market through this forum is vital, and we encourage you to continue with this trend. The Nigerian Stock Exchange recognizes efforts made by the board and management of Ardova PLC towards achieving business continuity by improving operations. We commend the successful rebranding and efforts towards repositioning the organization, thereby reassuring investor confidence in the company. We also commend the company's generous donations and interventions in supporting the national efforts towards cushioning the effects of the pandemic on the Nigerian populace. At the Nigerian Stock Exchange, we continue to provide a platform to support listed companies in meeting their strategic business objectives. We will continue to position ourselves as the African exchange of choice for issuers and investors by implementing policies aimed at strengthening the corporate governance of our listed companies and providing products aligned to investors' requirements in a fair and orderly market. Our technology platforms and transition to complete digital trading has supported our dealing members in trading remotely. This has continued to enhance market confidence and increase trading activities on our bourse. In spite of the pandemic, the NSE equity market capitalization as at the close of trading on Wednesday, October 14th, stood at 14.8 trillion naira, representing a year-to-date growth in capitalization of 14.73%, while the NSE All-Share Index ASI on the same day was up by 5.6% year to date. As part of our corporate social responsibility initiatives, we continue to implement on our mass donations to several states, schools, and institutions. You will recall that in April this year, the NSE launched its Masks for All Nigerians campaign in the bid to galvanize private organizations and individuals to provide face masks to Nigerians nationwide, most especially low-income households. We are proud to have received commitments from several organizations, associations, and individuals to achieve this laudable feat. On capacity building, through the NSC X Academy, we recently collaborated with the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, to organize training programs on corporate governance for boards of directors, executives, company secretaries of listed and non-listed companies, and the general public. The program enabled participants to acquire knowledge on the status and current practice of corporate governance, whilst also providing broad knowledge about the capital market. We encourage Ardova PLC to continue to strive for sustainability by adhering to the highest standards of disclosure on corporate governance. It is our belief that with our ever-changing macroeconomic and social environment, this will position the organization to attain deeper social impact, higher regulatory compliance, and more importantly, greater returns to its shareholders. We thank you, the invited guests, for your presence today and encourage you to participate fully during the interactive session. Ladies and gentlemen, we now invite Ardova PLC to make their presentation. Thank you.
Thank you very much, Olumide. Good afternoon, everyone. I would like to first thank the Exchange for inviting us to our maiden Facts Behind the Figures. During this period, I'll be talking through our numbers for the first half of the year 2020. So that's the half year ending 30th of June 2020. By way of introduction, my name is Olumide Adeosun. I'm privileged to be the Chief Executive Officer at Ardova PLC. So the market that we operated in at the start of the year, it felt like it would be one where the plans that we had made would be achieved without much headwind. That pretty much changed on the 30th of January when the pandemic was first heard, and it changed completely in March when the lockdown process began. Before I get into that, just a little context about the company. We are a household brand. We've been in Nigeria since 1964, operating first as BP, then nationalized as AP, then privatized again as Forte Oil. And on the 13th of February this year, we became Ardova PLC. Ardova PLC is basically an integrated oil company that's in transition. We are moving from being an oil company to being an integrated energy company that plays in the downstream sector. We say integrated, but we say energy because if we look around us, it's very clear that the green recovery and the energy transition is real. And as a company that intends to be around for the foreseeable future, it's important that we start to stake our claim towards building a future where the energy we provide is from sustainable and renewable sources. Now, that's not to say that our heritage is something that we're going to leave behind. We will continue to remain a leading fuels company. But I think it's important as we cast our eyes to the future, we make sure that we are looking to really broaden our value proposition to the market. As an organization, we are, next slide, please. As an organization, we are, we're very fortunate to have a strong network of assets. We have access to 450 plus retail outlets that sell fuel at the forecourt. The terminal, we have 30,000 lube oil blending plants from which we provide and produce household products such as Super Visco 2000, Super V, and HD lubricants. We also have a 6,000-ton facility that provides us, that we use for bitumen. And we have access to 4 domestic and 1 international aviation terminal. At the terminal, we also have access to 50,000 tons of storage for 50,000 liters, 50 million liters of storage for products. Our offer to the market is diversified, so we do fuels, automotive fuels. We do industrial lubricants and greases. We look into specialties and provide specialties such as bitumen. And we are also playing in the renewables and clean energy or low carbon space. Fundamentally, our vision is really to be Africa's leading energy solutions provider. And we're committed to driving growth and transformation in this space. In terms of leadership and governance, we have a strong board. We are led by the enigmatic Abdulwasiu Showami, who is also CEO of Prudent Energy and Services Limited, one of the leading companies in the downstream sector. Along the board as well, so he brings a lot of industry expertise and is a seasoned player in the sector. On the board, we also have captains of industry and leading lights in the legal sector. Mr. Shola Adeyo is an independent non-executive director, and is also the head of the statutory. He's the chairman of the statutory audit committee. Mrs. Duro Simieti, another independent non-executive director, leads our remuneration and governance committee. Mr. Mohammed Umar is the head of the risk management committee. And on the executive floor, I am ably supported by Mr. Moshood Olajide, who looks after finance and risk management for the company. So we believe that we have a strong board, and it is under the direction of this board that I'm pleased to serve. So before I hand over to Moshood, our CFO, to talk through the financials, we will look at the numbers first, and then I'll come back and do a recap on our strategy and give you an outlook for what's to come for the balance of the year. So without further ado, Moshood, please talk us through the financial highlights, please.
Thank you very much, Olu. In the period that ended, just to provide some context, and just to provide some context with respect to the environment in which we operated in the period that ended, there was contraction in the GDP of the country during that period. There were significant cuts by OPEC as a result of the pandemic. And obviously there was what you would call a technical devaluation of the currency. And it was within that space that we operated in the first half of 2020. 2020, in terms of high-level numbers, our gross margin came down to 6.1% of revenue from 6.7% for the same period in 2019. But our operating margin went up to 1.7% of revenue compared to 1% of revenue in 2019. And that effectively is as a result of significant reduction in operating expenses. And our profit margin also came back to the positive side, having been in the negative in the same period in 2019. Now, this comparison is based on normalized figure for 2019, just to draw attention of everybody on the call, because in 2019, there were some one-off items that provided a completely different perspective to our numbers for 2019. So, for example, we had divestment of some of our subsidiaries in that period in 2019. So proceeds from divestment was included in our 2019 number. And there were some subsidy related income that was also included in our 2019 numbers. Cumulatively, in 2019, our return on average equity was about 13%. Core assets usage was about 7.2%, and operating cost to revenue went down to 5.1% of revenue. So effectively, this period saw us improving some of the key indices on our profit and loss account and our balance sheet effectively. If we could go to the next slide. Thank you. So one of the most important things that happened during this period is the significant increase in our gross margins compared to the first quarter of the year. And this is largely driven by the move by the government towards complete removal of subsidy. I use that word cautiously because we are not there yet, where it's a journey. And if you compare the gross margin with the same period in 2019, there was a 15.9% increase in our gross margin compared to the same period in 2019. Our margin performance in Q2 2020 was driven by 33.6% reduction in cost of sales from Q1, as well as a 13.3% reduction in cost of sales in corresponding quarter in 2019. Also, in terms of revenue, if you could move to the next slide, please. In terms of revenue, there was a significant increase in our revenue when you compare our figures from 2018, 2019, and 2020. There was a 5.5% year-on-year growth compared to 2019 in terms of gross revenue. And if you run a comparison from 2018, you would see a combined growth rate of about 12.2%. In the first half of 2020, operating expenses declined by 20%, reflecting our consistent drive to improve operational efficiency and maximize return for our stakeholders. Like I mentioned earlier, if you adjust for one-off items, including accrued interest on subsidy that I spoke about earlier, and the divestment of our subsidiaries, our profit before tax increased by about 500% to 1.2 billion compared to the same period in 2019, which was about negative 300 million. Like I mentioned earlier, profitability margins also pitched higher at 1.7% and 1.2% respectively. So what we saw in this first half of 2020 was, despite the environment in which we were operating, a sterling growth in our profitability margins across board. If we go to the next slide, in terms of shareholder funds, there was a year-to-date increase of about 8% in shareholder funds. Our gearing ratio is significantly improved as we build a stronger capital structure by deleveraging and paying down most of the debts that were either done on our books. Our revenue lines are sufficient, more than sufficient, to cover our borrowing cost, and we can boast of a cleaner balance sheet and a well-optimized capital structure, with our gearing ratio improving to 37.8% in first half of 2020, compared to about 88.6% in corresponding period in the prior year. Our total asset dipped by 3.2% year to date, majorly driven by a 35.8% decline in intangible assets. So that was, in summary, the performance for the period. I look forward to questions on this presentation. Olu?
Thank you, Moshood. So in this next section, I'm going to try to do some high-level analysis on the product sales, as well as just provide some context again, so really try and get underneath the facts behind the figures that Moshood has presented. So in terms of our offer to market, we are predominantly a fuels business right now. That's where we're structured. So we trade across PMS, diesel, aviation fuel, lubricants, both produced locally and imports. Do less of the household kerosene and LPG, as well as our play in the renewable space. On PMS, I think the results speak for themselves. We at the start of the year, the board approved the strategy, which includes us maximizing throughput through our assets. So without really changing the configuration of the assets much, we're able to squeeze an uplift of about 28.2%. We achieved that by really tightening the tightening our value chain and really delving into the detail across the value chain to make sure that we're able to squeeze efficiency out of every hub. The same applied to diesel. However, diesel took a big hit as a result of the pandemic lockdown. Effectively, lockdown saw industry shut, and because the industry was shut, a lot of the businesses, the corporate users or purchasers of diesel stopped buying, and neighborhoods that were all buying for residential use were seeing power. So we had a market where we had a lot of product, but we just had nobody to sell it, no one to sell it to, and that sort of explains the decline, the 29.6% decline in volume of sales on diesel. For aviation fuel, again, I think the context really speaks for itself. No one got on a plane for the better part of 3 months. And even now, we're starting to see some movement, but the first half of the year really could be characterized as pretty much a low or no flight period. That said, at the beginning of the year, we had some good wins in the sector. We are contractually obliged to supply to some household international brands. So, and we started to deliver against those now. So what we envision for the balance of the year is really an uptick, all things going as they are now, an uptick in the quantities of ATK aviation fuel. But that said, even with the lockdown, you can see that we had a marked improvement on the volumes that were sold compared to last year. Again, this can be attributed to really the management team and the sales teams taking a hands-on approach and focused approach to growing a targeted and specialized customer base that have consistent shorts that we're able to tap into. For the lubricants, again, I think the drop in volumes belie the effort that we put into it. As you know, we are currently the distributors of Texaco products in Nigeria, and they take care of industrial lubricants, greases, etc. Now, with the big players, the IOCs not running operations during the pandemic period, that accounted for the decline. But on the upside, we were still able to show an improved growth in margins in spite of the pandemic. So I think the 11.9% drop actually still speaks very well of the efforts that we made as an executive team and the efforts of the sales teams. DPK, I wouldn't dwell on too much. It's not a fuel that we actively pushed hard, and the sales that are recorded there, 200 plus, is really us taking an opportunistic play into the kerosene market. But it's not a fuel that we particularly traded much of over the course of the half year. On LPG, we kickstarted our LPG program, albeit at a foundational level. So the volumes you see there really account for us buying some molecules locally on a retail level and just making sure that we have bottles at our forecourts. We expect to see much more activity, and then I'll talk on that when we get into the outlook slide. And then the last on this list is the solar. I think we have said in the past that what we're looking at doing now is sunsetting the current solar offer and with a view to launching a brand new solar proposition that we think is more in tune with the market and will lead to better profitability in this space. I'm not going to dwell too much on this, but this I think this slide really just sort of shows how we started and where we are now. Story. This is a comparison across the 4 main products against our peers. We are the green, and you can see that from first half of 2019, I think pretty much across the board, with the exception of AGO, and the circumstances under those are exceptional. We sort of moved and took more market share from our competitors. PMS, we led in terms of market share for the first half of the year. AGO, we were sort of parity under those circumstances. For lubricants, even with the pandemic, we still managed to gain a couple of pips, about 7%. And on ATK, we did slightly better than we had before. So what are we looking to do? We are going to focus on our core base, but we intend to really make a play for, no, please go back to the next slide. We intend to make a play for diversifying our portfolio. You've heard us talk a lot about the fuels, but we're really going to will see us play more in be more active in the LPG space. And we have some groundwork underway that will allow us to make good on the commitments we've made in the low carbon and renewable space. So you can take me 2 slides forward, please. Okay, I will try to, I'll go ahead without it. So by the start of the year, if anyone had said we'd have a lockdown for an extended period, I would have all said no. So our strategy for working through any unforeseen or future disruptions to service remain the same. We have modeled 3 scenarios, and we intend to maintain this. We intend to maintain these scenarios, and that's based on a best case where nothing happens, a mid case where there are patches of lockdown, and a worst case scenario where there is which we hope will never happen again, where there are patches of or where there are longer or protracted periods of lockdown. Regardless, we intend to mitigate these things through a trio of partnership, acceleration towards that energy transition I mentioned at the beginning of the talk, and making sure that we remain fiscally prudent and we maintain liquidity in our financials. We are looking at playing really to our strengths. We continue to be focused on operational efficiency, making sure that we don't lose value across the nodes we operate in. We'll continue to deliver a superior customer experience to distinguish us from our peers and our competitors. We will seek and apply innovation where possible. We will look for new ways of doing the same old things in such a way that they're much more efficient. And we don't intend to do this alone. We intend to work with best in breed, best in class players to make sure that we are delivering a diverse portfolio of services, working with best-in-class partners. And then next slide, please. Are we done? Next. There should be one more there that we can just quickly run through show what we're talking, what we're doing for the balance of the year. Oh, okay, well, that seems to be it. Thank you very much. I'm sure there'll be questions and there'll be opportunities for us to provide a little bit more insight into what we have planned for the near and immediate future. Okay, that's a slide. Please hold this for a second. So these are the 5. I think I'll leave it there. And then if we can talk through some additional information when we get to the Q&A session. So I hope that has been informative. You've seen what we're doing, how we've done, and you have a glimpse of what we intend to do in the near future. We're very happy to take questions as they come up. Thank you very much, Olumide.
Thank you, Mr.
Thank you very much. Thank you very much, Mr. Adiosun, for the wonderful presentation. We have a couple of questions here, and I'm going to be reading them out to you. The first question we have is from David, and he's asking, what is Ardova's strategy for expanding its gas product offerings?
Okay, very good question, and again, it sort of preempts the slide that didn't want to be shown. For us, LPG is at the heart of our diversification strategy. We intend to play across the gas value chain. It's an area that we're familiar with, but we intend to play on a slightly different scale. I think showing on the slide right now is when we look at the middle of the core asset optimization picture. We are looking at putting a large storage facility, gas storage facility at our facility in Ijora. It's a big site, and we believe we can take it. We're currently undertaking some exploratory work in the form of front-end engineering design. So we intend to put a 15,000-ton facility there. We also intend to build out the distribution channel so that will scale, or that will be able to take the scale of storage. We're also looking to deploy a significant amount of gas plants and outlets nationwide. And those will start to manifest in the near term. You'll start to see us participate more at the retail end. And over the course of time, 12 to 18 months, you'll see us really sort of move back into the value chain in the form of storage and other ancillary facilities.
Okay. Thank you very much, sir. I have 2 questions from Chiwendu Obenyi. Is a reporter from one of the newspapers. He's asking, what strategies is the company taking via positive sales and financial performance for next year, especially with looming recession? And the second one is, you mentioned something about Ardova launching or tapping into solar energy source, I think. Kindly do more on this, please. Thank you.
Okay, I think the first one, I'll refer that to our Chief Financial Officer. Maybe you might want to repeat the question, and I'll come back to you on what we're looking to do in the solar space without giving away too much trade secrets.
Thank you very much, Olu. The question is about what we're doing to prepare ourselves for the looming recession in 2021. Is that correct?
Yes, please.
All right. So, I mean, for us, and that's why I really wanted the slide that Olu wanted to talk about to come up, so that some of these questions would have been answered if we had gone through that slide. Now, for us as a business, there are a number of priorities for us, and one of the very important ones is making sure that we improve our efficiency and obviously improve our revenue sources, increase our revenue sources. By doing both things and other things that we have planned for the future of the business. We believe that we will be able to prepare the business for a potential recession. We will continue to sell the items, the petroleum products that we currently sell. But as we do that, we will continue to add additional products and also improve the efficiency with which we deliver our current product slate. And with that, we believe that we will be able to weather any storm that comes our way as a company.
Okay, so I'll allow Mr. Adeosun to answer the second question.
So the second question was that I had hinted that we are doing something in solar, and I think the reporter wanted to know a little bit more. So we believe in the energy transition. We believe that at some point in the future there'll be less reliance on fossil fuels as we know it, and there will be a pivot that's already starting towards using more renewable sources. So in the solar space, our ambitions are tiered. We will play at the we'd like to play at the wholesale market, and by wholesale I kind of mean like at the top end of the solar business. The first thing we're going to do is that we will basically become consumers of solar. So we, at the start of this year, we rolled out a pilot of solar at 100% solar at 12 of our stations. Those stations are now fully online and they're running on solar. And I don't think we've turned on a generator since we put them there. The idea is to extend this rollout across all of our stations, across our network. Then longer term, there are certain technologies that are available that are directed at the retail bottom of the pyramid space. So this is where we're looking at doing things in the portable power space. I don't really want to go say much more beyond that, but we're looking to operate at a portable power space that is again akin to the way we currently deploy petrol. The average customer comes to our station and spends about 1,000 naira. Well, we want to be able to provide that sort of offer, but in the power space. And so we're looking to deploy some new technologies in that area. We expect that you'll start to see the first of these installations, of these deployments, right about Q1 2021. So if you'll forgive me, I'll leave it at that, and I'll ask you to watch the space. It might come in sooner than that, but I'm committing to a 2021 Q1 a date on seeing what we're doing, what we're doing in the solar space. But rest assured, we're doing a rollout of solar at all of our stations, and any new station that's built today will be designed or configured to run 100% on solar. So we become our own customers.
Okay, thank you very much, Mr. Adeosun. We have another question from Odume Festus. Is asking, good presentation with much prospects for the company. My question is on your target for the future in respect to energy business. What would be the percentage of focus between energy and your core fuel business?
So that's slightly harder to do, but I think what we've committed to is to say that we anticipate that in the next 3 to 4 years, about 20% of our revenue will come from renewable or low carbon sales of renewable or low carbon energy. So okay. I mean, as you know, we as a geography, as a jurisdiction, are very dependent on fossil fuels. And I think even though that we might see acceleration in the use of EV and other hydrogen and other fuel sources in other countries, wind, etc., I think here in Nigeria there'll be a slower uptake on that. But what we intend to be is we intend to be We intend to be one of the first movers in this space, particularly around low carbon, i.e. LPG, and renewables, solar. We're also exploring one or two other technologies, but they are very, they are early stage, and I think, again, I would not like to, I wouldn't like to say too much about them now, but we are looking at about 20% of our revenue and then scaling that up over time so that the energy mix, or at least the revenue mix, starts to shift in time, with eventually ending with a rebalancing, at least towards energy versus just pure fuels.
Okay, thank you very much for that question. There's another question from Uwa saying, thanks for the presentation. Can we have an idea of the current margin trend of PMS? That is, what is the expansion contraction like deregulation?
Okay, so this is asking what the impact of the deregulation, and I share Moshood's sentiment that let's not put too fine a point on it when we say deregulation, because we know that we in the industry know that that's still very much a moving target, and we have not hit destination. I think if you look back on the first half, it's kind of difficult to have to paint an authoritative picture, because this was a very unusual first half of the year. I'm not ashamed to say that there were some opportunistic plays when the price of PMS went below a certain level, which allowed us to participate more actively in the import space, and which also allowed us to see some uptick in margin. But otherwise, the PMS game is very, it's very hard to scratch a margin through. So we really have to knuckle down on efficiency, and I think for each company it will be different. The margin each company will make will be slightly different, because it really depends on how tight an operation you're running. In a semi-regulated space, it's still that control is less ours, and still more dependent on other factors such as FX, liquidity, and the extent to which we're able to source PMS from multiple suppliers other than PPMC, which is where we currently get all of our fuel from. All of us in the industry get our fuel from. So it's very hard to paint an authoritative margin picture. It's very unpredictable, and I expect that will be the case until we move into a fully deregulated market where all players have access or equal access to foreign exchange.
Thank you very much for that answer, sir. And then we'll move to another question, and this one is from Motolani Oduwoye. What should shareholders expect in terms of dividend from your team, in view of the fact that you've not paid any since coming on board?
Well, let's look at us as a company, right? The corporate stands, and I do believe that a dividend was paid sometime before, in the first half of 2019, 1.5 billion or thereabouts. Look, we have a core investor who holds us to account, and he's also counting the hours, and our shareholders are counting the hours till we put some dividend on. Let's see how this year shakes out. You've seen the numbers. We hope they continue to. We hope they remain on this upward trend in terms of performance and revenue, and I think we will be in a position to make a call, at least to see where we are vis-a-vis dividend after we've seen the full year results with us as a management team. Oh, I'm done.
Toby, are you there?
Oh yeah, sorry, I muted my mic. Another question from Joseph Isua is asking, what is Ardova's risk appetite in expanding the business in the northeastern part of Nigeria? what is the company's plan to sustain its current market in the northeastern part of the country, keeping in mind the current condition of the region?
Okay, I mean, that almost sounds like a question that's answering itself, but actually, I think the answer is not as you might expect. Fuel is you need fuel for everything, right? So no matter what is going on in that part of the world, or in that part of the country, we have presence there. We have plans to continue to establish even more presence there. We are looking at setting up a gas plant in Adamawa. We are always looking at opportunities to open retail stations there. To the extent that there are human beings there, they have industry, they have security needs, they have everything. We absolutely have appetite to participate across the country, and we don't necessarily isolate the Northeast as a place where we don't want to participate because of the risk profile. Fuel is a much needed commodity, regardless of the socioeconomic or political context. So we're there.
Okay.
The point I'm making.
Okay. Thank you very much. We have a question from Joe Obi, and he's asking, as an investor in diaspora, what are you doing to encourage investment from citizens in the diaspora? Too often, citizens outside the country are able to invest through various internet platforms. However, they eat snacks when it's time to cash in on their dividend. What efforts are you making to mitigate against this problem of inability to cash dividend? I did like to suggest that once an investor provides an account from which they fund their investment on investment platforms, dividends should automatically be deposited into such accounts. So this is a question, and at the same time, offering some form of suggestion.
This is so. I mean, I don't know which of my colleagues are on the line to speak to the modality.
Let me take that.
Okay, thank you.
Let me take.
Thank you.
Yes, the SEC has been very intentional over the past few years in pushing for an electronic dividend policy, and indeed there is a process for investors to fill electronic dividend mandates, and if you engage your stockbroker, they can or the registrar in question, they can give you necessary guidance and necessary material that you can fill to do exactly what you're proposing. So there is a solution on that as we speak. I think if you just engage a daily member of the exchange or your current broker, or indeed if you want to engage the exchange directly, we can give you some guidance on that.
Okay. Thank you, Mr. Borimole. We have another question from Ardova Investors, and he's asking, in your presentation, it seems that Ardova PLC is not interested in DPK. What is behind such management decision?
Well, if you think about where we are headed as a country, so DPK is typically used as a cooking fuel. And it's usually used as a catalyst in combination with things like firewood and other forms of biomass to cook. I think that the health implication of cooking, of this sort of open fire cooking, are well documented. And I think that the environmental implication of cooking of using firewood in terms of deforestation and erosion of ground crop cover are also well documented. So for us, under our tag as Energy for a Brave New World, we want to be forward-looking in terms of cooking fuels. And we are more proponents of conversion to LPG than we are seemingly supplying into what should be, I think, a sunsetting domestic cooking fuel. So it's just not something that we think that we think has a lot of future in it. And besides, since it became a deregulated product, there is demand, but at the scale at which we operate, it's very difficult to kind of meet the lower level of demand that there is out there. So it's just not it's not a strategic field for us. And we think that there are cleaner alternatives that we would much rather embrace and actively push in the market.
Okay, maybe the last question for the day, very quickly. This one is from David, and he's asking, what is Ardova's projection for intangible assets acquisition?
I beg your, can you repeat that, please?
What is Ardova's projection for intangible assets acquisition?
Moshood, this might be one for you. Intangible assets acquisition. Okay.
So I'm suspecting that this question came up because of my comments when I was talking about our assets, the reduction in our asset balance in our balance sheet. And just to provide some clarification, the intangible asset that you see on our balance sheet is effectively the software, our ERP, mostly. That's the largest component of that. And because we're in the process of upgrading that particular item of intangible assets, you might see an increase in that number in the foreseeable future. But apart from that specific line, in terms of technology acquisitions and things like that, we don't foresee any other type of increase in our intangible assets, at least from a materiality perspective.
Okay. Thank you very much for that. I think that will be all for the question and answer session. Thank you to everyone who participated, and apologies if we are unable to answer your questions. So we'll go very quickly to the closing remarks and the vote of thanks, and I would like to invite the doyen of the market, Alhaji Yusuf, to give his remarks.
Thank you.
Alhaji.
Thank you very much. Let me first also welcome you, the chairman or the MD of Ardova PLC, and the CFO, Mr. Moshood Olajide, to the floor of the Nigerian Stock Exchange. Even though we are doing it through the Zoom, but you are still on the floor.
We're on the floor, sir. We're there with you, sir.
And when you are invited to come and address broker, you address broker on the floor of the exchange. So it doesn't matter whether technology has transformed the floor to Zoom world that we are looking at now. And in welcoming you also, I also want to welcome this CEO of Nigerian Stock Exchange as #1 citizen on the floor of Nigerian Stock, ably represented by Olumide Bolumole. It is quite interesting, actually, that we have today the MD of AP Ardova PLC, I believe, and the representative of Nigerian Stock Exchange CEO, bearing the same name, Olumide. So we have a situation of two Olumides making presentation today. I think that's something positive for you. Like I said, I want to thank you for the presentation that you have made. You have given us a lot of insight into what is going on at your company, Ardova PLC. As you know, you just transformed relatively recently from what we are used to as FO to Ardova PLC. And the market has actually been anxious to hear from you. How is it going? From what you have told us today, you've given us an indication that not only have you settled with your new name in the market, your figures have also settled, and even been more than settled. Your figure appears to have even been on the upward trend. And that to me is an indication of a cheerful note to the market. We are happy by that indication, but we challenge you that this is the first report you are giving to us. We need to have more information from you because the market need to assess your situation within the market, particularly in pricing your stock. As you know, your stock used to be one of the hottest cake in the market. But you've gone from one transition to another, and that has affected your pricing because it has brought some element of uncertainty. But from what you have said today, you seem to be saying you are well settled and that you are ready to move in the north direction. We will take you on that words. And I assure you, both the stock exchange and the Nigerian stockbroker will be ready to support you. We'll be ready to give you all the assistance you need that will enable you to continue to excel and move in your pricing and the northward direction. I must tell you that what you have presented this afternoon has given us a lot of information that we are still going to work on. Because prices on the Nigerian Stock Exchange are determined by three major factors. The first one is your published account. Then you give us your published account on a yearly basis, and then follow it up with a quarterly report that you give to the market. But in addition to that, you also need to give us more information like what you have done today, because we need to have information, and that's why we call this program Fact Behind the Figure. If you know about more facts about how you are running your company, the challenges you are having, and the prospect that you are expecting, then all of those also will assist brokers in reflecting appropriately the pricing of your stock. Where you are not providing that kind of information, then you are opening yourself to what we call public hearsay or rumor, and that might not necessarily be beneficial to you. So we will urge you, as you have provided us with much information today, continue to provide this information. Even when you are challenged, when you have problems, provide us. It does not have to be positive information every time. When you are challenged, we are there to also solidarize with you and work with you and make sure that you overcome whatever challenges you have. It is really our pleasure to have you today. We are happy with what we have heard from you. We expect much, and the shareholders also will be delighted by the indication you are giving today that they should be expecting a more robust performance from you in the immediate future. I want to thank you for the presentation. I want to congratulate you on your new appointment and wish you the best of luck. You are welcome, and thank you very much.
Thank you very much, sir.
Thank you, Doyen. Mr. Diosho, may I invite you now to close the market for the day?
I'm here.
Distinguished ladies and gentlemen, that familiar sound is what one would have heard if we were on the physical trading floor. It signifies the end of another hopefully successful trading day. I want to congratulate Mr. Diosho and his team and the management of Ardova PLC for the successful hosting of their Facts Behind the Offer. I think they did great justice to the Q&A session and gave a lot of insight into the future prospects of their business. I would like to thank our participants on Zoom, YouTube, and other social media channels for joining us this afternoon. Thank you all, and continue to stay safe. This event now ends here. Thank you all.
Thank you very much.